Okay, look, there's a lot to unpack here. So
Tons,
I think we should take our time because I think one part of it is meta.
Okay.
But one part of it is actually about what we talked about a few episodes ago, which is like this big tech put, right? Where they define the rules of the game on the field for every other startup. And I think the third part is just about like the era of big tech being over and what it means for the stock market. If you section it out in those three ways, Jason, we can have a pretty rich convo. I'd love to tee some of this up.
Where do you want to start?
Okay, so let's start with Meta. So Nick, can you please throw up Apple versus Meta for a second? And let me just give you guys the talk track and then maybe we can go from there. So when you look at Apple versus Meta, there's this really interesting thing that comes up, which is in 2016, and we've said this before, you could not give Apple stock away. They were generating a ton of cash. It was sitting on the balance sheet. In many ways, Facebook was doing the same thing. And there was this famous dinner. I don't know if it was a dinner that ever happened, but that's how the lore is told, between Tim Cook, Carl Icahn, and I think Luca Maestri, the CFO. And in it, what Carl Icahn said is, listen, I have a below-the-line suggestion for Apple. And what does that mean? If you look at a P&L, you have your revenues, that's above the line. You have costs, that's also above the line. And then you have your profits, and then it's what you do with the profits. So what he was suggesting is below the line. After the fact, he had no suggestions for how the business should be run. He just said, give us back the money, and we will reward you. The stock price will go up. And what's interesting to note here is the black line is the performance of Apple stock as they've given back and they've used a ton of their own balance sheet cash to buy back the stock. Okay? So they've spent $396 billion since 2016 to buy back stock. In the same time, Facebook has spent almost $100 billion. Now, here's where you start to see the divergence. So you would have said, well, shouldn't Facebook's stock have reacted in the same way? And for a very long time, it actually looked like it was right until about September 21. And then obviously this thing fell off a cliff. And the reason why it started to fall off a cliff was somebody started to notice that, hold on a second, even though you're buying back all these shares, the bottom of the funnel, right? You're leaking all of these shares to all of these new employees. Why are you hiring so many people? And this is when people started to uncover what was happening above the line at Facebook and is what caused this massive dispersion. So, Nick, if you go to the first chart, so what has actually been going on above the line? Here's what's going on. If you look at the light purple bar, Facebook in the last 2 years have spent $25 billion on reality labs. And they said that they're going to spend, meaningfully more in 2023 and then sustain that investment for a while. So if you do a little bit of math, if they spent, they spend around $4 billion a quarter right now, so $16 billion a year, that'll go to $25 billion in 2023, and then they'll sustain that. What that means is that over this, 12 or 13 year life of reality labs as we've seen it, these guys will have spent $250 billion. I wanted to understand $250 billion in the context of other major leaps in humanity. So at the left is what Apple spent in its entirety. By the way, these are all inflation adjusted dollars for today. Apple spent $3.6 billion to create the first iPhone. And what they did was they said every subsequent version of the iPhone would only be funded from the cash flow and profits of the generation before it. Right? So they used consumer demand as their guiding principle. So it was a very incremental approach. iPhone 1, iPhone 2, and now we're at iPhone, 14 or whatever, 13. But the point is, it took $3.6 billion to get that juggernaut off the ground. The Manhattan Project will cost $23 billion in today's dollars to create the atomic bomb. Tesla, in its entire life, spent $25 billion to get to free cash flow profitability. And they took this incremental approach as well. We'll create the coupe, the Roadster, then the Model S, then the Model X. They iterated their way. They used customer demand and all of that revenue to fund future growth. The cum spend on Tesla was $25 billion. Boeing spent $32. Google and other bets has spent $40. The only thing that I could find in history that is comparable to what Meta has basically said they're going to spend is the entire Apollo program, which cost in today's dollars $250 billion as well. So the problem is that below the line, Meta was doing the right things. Above the line, they've created, I think, an enormous set of pressures for themselves, which is, if you think about the Apollo program, this was 13 years of building rockets, getting to low Earth orbit, then getting to be able to, orbit the Earth, then eventually building an entire infrastructure and capability to land on the moon and get back. So there was a lot of incremental progress there. I think what people don't understand is, where is this $250 billion going? And is it going to be a leap in humanity at the scale of the Apollo program? Because it now is becoming the single largest capital allocation program in capitalism history. Nothing comes close. So I think that is a really interesting, maybe jumping off point to talk about what's going on inside of this business. I think they're doing all the right things below the line, but there's this one major big red flag above the line that has to be probably better explained by them if they want to have long-term shareholders. And basically what happened was, when people heard this, they said, this is a dumpster fire, we're out of here. I think the problem is really in this Reality Labs. The amount of investment that they're making is so outsized and so abnormal and doesn't compare to anything anybody's ever seen. I think everything else in the business seems to be actually quite functional. So the problem is that this above the line thing, though, has become so big, it could sink the business. It's very, very hard to see an investment case for $250 billion of money in the door before you really start to see something magical. Now, they may have something super magical that nobody knows about, that they're going to unveil and say, see, told you. And maybe there should be a set of outcomes where we plan for that. I think what investors reacted to was spending $25 billion a year needs to be measurable somehow. And I think what they said is, the things that we're seeing don't necessarily tell us that this bet is going to make any sense at that level of spend. So if you were spending $2 billion a year or $3 billion a year, I don't think people would have said anything. It's just the magnitude relative to the progress that's being demonstrated publicly. And that's the thing that I think the Tesla program got right, the Apple phone program got right, the Boeing program, even the Apollo 13 program for that quantum of spend. So it's not to say that you can't spend $250 billion over the next decade. If you compare what Brad asked Facebook to do on Monday versus what Icahn asked Apple to do in 2016, Icahn basically said, just make this below the line change and everybody will be happy. It's a do no harm solution. None of us are getting in the way. We're not telling you how to run the business. The thing that I think that, what Facebook had to react to was Brad's suggestions were fundamentally above the line. It's like, firing 20% of the people or 30% or changing the capital allocation would require some changes to strategy. And I think this is a good moment to recognize that as much clarity as Brad's letter had and as much sense as it probably makes to outsiders looking in, the minute you have to tell companies how to change above the line, it's just a good reminder to me that no, it's not going to happen, because these folks will not want to make those changes. They have an incredible core business, and they have decided, for whatever reason, to make an enormous bet. And that bet could be a very good bet. But the way that you make a bet, and you've said this well, is you have to look at incremental progress. And you have to demonstrate that all of these bets make sense, because the problem is when you get compared to the Tesla program, look, Tesla is reinventing an entire category, trillions of dollars of energy generation and transportation, but they did it in 1 year of Meta Reality Labs spend. Apple reinvented an entire compute platform on 1/4 of Meta's Reality Labs spend. That's not a judgment. That's just a numerical observation. So if you want to get people on your side, you just have to be able to double click into that in an elegant, articulate way and say, here are all of these things that justify $25 billion a year. Again, if you go back to that first chart of Apple versus Meta, the fact that you've hired so many people to work on a category with so much money, it just violates a lot of pattern recognition that people have historically seen. So all I'm saying is, maybe this is a great bet. They just need to do a better job of explaining.